The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 28th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstances of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, well, let your fingers do the walking. You can always send me an email, steve@tfnn.com, and inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have pretty much a flat market. You've got the Dow down 5 points, the S&P up 6, the NASDAQ 100 not flat. It's up 0.5%. That's 36 points to the upside, trading out at 69.36. But the Russell's up 2 points, so that's flat. The semis are up 1 point. That's flat. The trannies are up 8. That's flat. The VIX is up a full percentage point. That's 18 pennies. We'll certainly talk about that. Gold's up $1. No big deal. Silver, 2 pennies. Light sweet crude is down 36 cents. That's about 0.6% to the downside out there. Leading the charge to the upside, dollar-wise, $148 to the upside. That's nearly 8% is Booking Holdings. That's got a nice move. Trading out at 2053. AutoZone up $26 or 4%. You've got Biorad Labs. That's up 6.5%, $16. Mercado Libre up $14. Arista Networks up 12. To the downside, leading the charge, it's Rogers Corp. Rogers off $27 or 18%. Albemarle down $8. That thing has struggled. That's down 7.5%. Although I did see it bounce off of the bottom out there when I did last look at that chart a few days ago. Celgene off $8. DAQO, D-A-Q-O. New Energy. DQ. It's not the Dairy Queen, though. It's down $8. Installed Building or something along those lines, down $7 or 10%. So plenty to look at to the upside or the downside. Of course, I want to look at what you want to look at. So send me an email, give me a call, do something along those lines. So let's start off by talking about the spot volatility index. And the one thing, in doing 2 shows yesterday, this hour, as well as the 3 to 4 o'clock hour, the one thing that I'm grateful for is the ability for those that were listening in on that show to stop you from the natural instinct, seeing the market sell off like it did, to want to go ahead and say, okay, I'm going to go ahead and jump on the short side of that trade. I could not have been more clear that that was not the correct move. And if we were to replay that show, we would say you would wake up in the morning, you would open your eyes, and you would see that futures were trading higher. And they did. And the Dow moved up 100-plus points or so. I don't remember the exact number out there. And the reason that we said that, because I know that inclination. For those of you that had that and didn't have the set of tools that, I have developed over the last 10 years, many of which I've shared with you, I understand that inclination. Yeah, it's what is that, the fear of missing out, or you really believe the big move is coming because you see a dollar move out there. But the cool tool, one of the cool tools out here, that spot volatility index, which yesterday closed up from a percentage standpoint, what was it? At the end of the session, it was, oh, man, this is the wrong chart. Whereas, here we go. Let's pull up the right chart. If we pull up the right chart, I can give you the right information. That always helps. 17.66%. And what we said is bounce or bottom. We never know which of the two it's going to be. Used to be a 48-hour deal. Over the last many years, when I say last many, 3, 4, 5, it's really been within a 24-hour period of time. And that's what we saw that unfolded out there. Now, at this stage here, it's hard to really call it a bottom. In fact, unlike the trading session back here on February 8th, where we were able to call a bottom. We actually were able to call the bottom on February 9th because same pattern that we'll actually show you on the 30-minute time frame chart for the ES Mini was because of those signals, both in the case here on the 8th, where you saw that one-day rate of change greater than 10%. In that case, it was 20.66. And then the very next day, where it was a negative 13.15%. The plus 10% level, the minus 10% level, they're very key. Now, they're very key in being able to go ahead and integrate with other signals out there. So the signals that were present that gave the signal that the bottom was February 9th out there, that was not present yesterday. That's why yesterday, very easy between 3 and 4 to be able to say, don't do it. Don't jump on the short train. You're going to see the market bounce, which most certainly it did. That piece of it is over. So now it's 1:12 in the afternoon. We have to try to figure out, hey, what in the heck is it doing or what is it not doing? So with regard to the spot volatility index and the S&P futures contract, because really this is where we're tying it all in. If you were trading last night at about the 11 o'clock time period, at 11 o'clock or 11:30, I should say. Was it 11:30? No, 22:30. What does that equate to? 10:30. I'll eventually figure it out. In fact, we'll get rid of the A to B equals CD pattern. See here when price was making its high yesterday. All right, this was at 10:30 yesterday morning. As the Fed came out, was speaking and so forth, Powell was speaking out there. Market moved higher, did it with less relative energy. Very next trading session on a 30-minute basis, there's your bearish reversal signal. Closing below Stevie's red line, that was saying, okay, further pullback. Then when we get that test of Stevie's red line, in essence at 1:30 yesterday, you and I looked at this and we said, hey, you know what? There's your test. You now have falling price oscillator below zero. Well, then we came out with our A to B equals CD price projection. You never know which one it is going to generate. We took a look at it and said it's probably not the one-to-one level out here. Probably not the one-to-one. Turned out that, well, I was wrong. It was really the one-to-one level. That was 27.40. But you're never really certain. The reason why I said probably not the one-to-one level is because it was only a 50% retracement. And that gives that little coil, that rubber band, the ability to move lower or further than that one-to-one area. And when I say one-to-one, folks, all I'm referring to is the measurement of the A to B level out there. But what it did do, in addition to completing that pattern, so that's one pattern that completed, price was also moving lower, doing with less relative energy. That is a very important pattern out there. That's the same pattern that was present way back on February the 9th, if we were to go look at that chart, that identified the bottom. Right now, it's a bounce. We'll have to go back and take a look at a couple of other elements, right, just to get our head wrapped around this, to figure out what the market is communicating to you and I at 1:14 in the afternoon. Give us a call, send us an email, or remain silent. Steve Rhodes with TFNN. We'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's get to a couple questions that have come in during the breakout here. The first is for one of our dinners, Dart, and I like Dart. I owned a, well, not really the Dodge Dart. I had the other one, the Duster with the nice engine in it out there. Those were easy cars to work on, were they not? In any event, wants to take a look at 5 Prime Therapeutics. FPRX is the ticker symbol. This thing is having a celebration day out here. Now, volume-wise in this does not have a lot of liquidity, so to speak. Today, 753,000 shares. Yesterday, for the entire day, 360,000 shares. So what we can say is this has come off of the bottom. If you're watching this on Tiger TV, you're looking at a daily time frame chart. It's come off of the bottom with conviction. Now, what it has also done here, Dart, is it has run right into resistance. Your target's 11. I got the right, my target is 11. It's trading at 22.29. Do I have the right trade up here for you? No, you want, you want ARW. Or what did I put out here? FPRX. I think somebody asked for FPRX. I had to get that from somewhere. For Litecoin, Paul. Okay, so I got this all screwed up. My apology. And so, Paul, I should have asked you exactly what it was you were doing in this. So my apology there, Dart. We'll get to ARWR. But with regard to 5 Prime Therapeutics, at this stage here, let's just analyze the chart and see what we see. So what has occurred, even though you've had a nice move off the bottom here, where this equity did have volume, 4.5 million shares, was when this thing came off of the highs from back in November out there. So this area here, that November 7th level, where there were 4.7 million shares, that day, the high of the stock was 39.18. And that thing ran all the way down to 21.41. That's a pretty decent percentage move. From 39 to 21, that's $10. That's like a 30% move from those that bought in at the highs. So those folks, just picture yourself being those folks, and this thing is now bouncing back and has got the 22.35. So as it's getting into that, in essence, entire price range, there's just simply going to be a lot of agitation. There are a lot of folks there that say their prayers have been answered. I just want my money back. Am I saying that's the right thing to do? No, what we want to do is understand the emotions, right? The energy, right? That's all emotion is, emotion. We just want to understand the energy that this equity here is running into. And just happens to be the top of the daily box, 2253, that is also contained price. So that's what it's saying on that time frame. From a weekly standpoint, week does not end for a few more days. You'd really like to see this close both above the top of the daily, 2253, and above the top of the below the bottom, which is 2235 or 2239. I'd say you want to really see that 2253 close above that in order to then suggest, okay, over time, that this equity here would run to 24.98 and 30.23. So that was for Litecoin Paul out there. Now, since I had such confusion, let's go take a look at, which, you know, that happens basically all the time. Let's take a look at ARWR out there. And I am confused, and I think even we had an email that came in from Larry talking about confusion. He says, quote by Jack Welch, if you are not confused, you don't know what is. In any event out there, yeah. So if we take a look at Arrowhead Pharmaceuticals, so you're looking for 11 buckaroonies on that. So we get that. In this case here, the nice thing about taking a look at this one set of charts here, daily, weekly, monthly, we see where all the support and resistance is daily, weekly, monthly. In this case here, prices above resistance on the daily, weekly, monthly, the top of their task profiles. Now what we get to do is take a look at what's going on from a daily perspective. In a daily perspective, in order for you to get 11 buckaroonies out of this, you really want to see price close over the January 22nd high. 675 is your number. The volume there was 3 million shares. Now, this level here was tested. We'll just draw what I think is going to be a yellow line. Well, I won't even think. I'll just make sure that it's a yellow line. And that's the 675 mark. And you can see that that was tested with light volume. That was 2 million shares yesterday, was going against 3 million shares. You couldn't bust through it. Now, you're trading still within that swing point. So it's a test and a rejection. But it's not a real rejection. It's not like, you know, you made a phone call and they just hung up on you. It was a little bit of a conversation. And I said, no, I don't want to buy today. But as long as you trade inside that swing point, between 627 and 675, all is not forgotten. Now, as price was coming into the swing point, nice wide-ranging bar, 226, but not accelerated volume, right? 2.5 million shares, again, going against 3 million shares out there. If this takes that level out, that's what you're really looking for. Then on a daily basis, you would have an A to B equals CD, a lightning bolt pattern. And that lightning bolt pattern gives you a initial target, right, the one-to-one target of $8.51 out there. The 1 to 1.272, that's one of those Fibonacci expansion numbers, is 953. The 1082 level is your 1.618 level. That is Arrowhead Pharmaceuticals. Got to clear 675 before you can even get to the 851 level. If we take a look at the weekly basis, well, in the weekly time frame, it's Wednesday. You're looking at volume of 9 million. You've got 5.3 as we speak today. Maybe on a weekly basis, but still on a weekly basis, it must close above 675. Seems like to me, you know, from my mathematics school, if we just multiply today's volume times 2, well, you're coming into this with more volume. You're coming in with more than the 9 million shares. So it says, hey, stay put, not kaput, but stay put out here, but you still need to see that close above 675. You'd still, in essence, have the same A to B equals CD pattern, because swing point-wise, just to make sure, I'd be using the low from December of 2017, the B point out here on January 22nd, and that's the week of, and then the low of February 12th out there, and there you go, 1-to-1, still 851, 950. So those are the numbers that I would be watching for next before 11 buckaroonies out there. It looks to me like this was a shell company. If not, and or whatever it was, it's got the reverse split-itis out here. Because if you take a look at this equity, if you went back to the highest price that's available on its chart, it would take you back to 1994, and this would say this was once trading at 21.93. Pretty good chance it wasn't trading at 21.93 out here. So it makes it somewhat difficult and you've got to go back and take a look at the 10Ks and Qs and everything out there to understand when those reverse splits were in on this thing before you can really start using swing points to try to identify where this thing might head to. So, Dart, I hope that that helps you out with regard to at least Stevie's analysis for Arrowhead Pharmaceuticals. We had another request as well, and that was from Bob in Spokane. He wanted to take a look at soybean oil out here. And, Bob, the only thing that I've got for you, I don't have the symbol for soybean oil to put it on my other charts out here, meaning my charts where I can take a look at additional patterns, key patterns, because you're trying to find a bottom out here. But what we do have are the TAS market profiles. So when we come back from this breakout here, we'll go take a look at those 60-minute, 240-minute daily and weekly profiles on soybean oil. And what we're taking a look at is December 2018. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the charts we have up on our screen right now, 4 different time frames, 60-minute, 240-minute, daily and weekly time frames for the soybean oil futures contract. This is for December. And what Bob in Spokane is looking for is a re-entry point into this. So when we take a look at the 240-minute chart, we can see the nice little uptrend, the nice bottom that this thing formed back here. Looks like the day of February 20th, around 6 o'clock in the morning, is when this most recently bottom, and taking a look at that chart and that time frame. We can also see that at that point in time out here, at that specific point in time, what else is it that we can see? I was going to say we could see an orange candle that had generated on the daily time frame, and that looks like a bullish reversal signal, bullish engulfing candle as I take a look at it, or a bull sash candle. It's a little bit easier to see when I look at the candlestick versus the actual bar itself. But it was an orange bar. Looked like a new profile was going to form. It didn't. That's on a weekly time frame. If I take a look at the weekly time frame, though, for you, okay, because you're looking for a reentry, we take a look at his profiles. That's the very right-hand panel chart out here. We can see that's a bullish structured box. We say bullish structured. Again, we're looking at longer term. If you and I can get our longer term heads correct, it's going to make it easier to understand what's going on the noisier charts out here, daily, 240 and 60. And so this is a bullish structured box because the center line at 33.39, much closer to the bottom at 32.90 than the top at 34.36. Real support right now, 32.90. We would say if price got to 32.90, that might be your entry point. That would be one possible entry point. So jot that down on a pad of paper. I don't know if we're going to get back down there. We may, but 32.90 is what this would be saying. If you saw a close below 32.90, says you may go down and revisit the lows out there. So it makes the trade easy because the risk reward, other than falling out of bed, is pretty. You've got some good data in order to be able to make that time frame trade. On a daily basis, the number is 3306. In fact, its daily structured box also has a bullish bias. Now, it's trading below 3306, right? It's trading out at 3303. Do I have a delay? No, I don't even have a delay on this. So it's trading below 3303. So I would say, looking at the daily chart, says, nah, don't enter now. Don't enter now. That's what the daily time frame chart. The 240 says, hey, my bottom of its box, also bullish structured, right? Center closer to the bottom was 32.98. So you got the 32.98, 32.90, or 33.06. I would say if this closes above 33.06, okay, then that was your entry point. That was your signal. Right now, daily is going to take a bit of a priority over the 240-minute. And so it says, not until I get above that, be patient. And then we have our 60-minute time frame. That's the very left-hand panel of our screen. We can see that we're down below the bottom of it. We have made a higher low on that, and that was at 11 o'clock this morning. So that's somewhat bullish. But this also says, hey, it's got to get above 33.06 in order to give you a buy signal. So I really think that the 33.06, if you get a close above that, then go ahead and fire away. Recognizing that 33.28 at the moment on this 60-minute time frame and 33.35 are your real resistance points on any move up. We may get new profiles out here, especially on the 60-minute time frame. I just don't know. But that is what I would suggest. I would suggest to you, Bob, for entering a trade inside of soybean oil futures. I hope that helps you out. We had a request that came in from Tom, and he was looking for a entry into USLV. So that is one of the, I believe, the double or triples for going long silver out here. So if we try to figure this out for Tom, which we will, here's the first thing that I would be doing, Tom. I'm first taking a look at the daily time frame chart for Steve-O. And what we don't like on this daily chart, I'll tell you what we do like and what we don't like. What we don't like right now is the mere fact that price has not been able to close above Stevie's red line for like 6-7 days out here. 1649 is the number right now. And so to confirm that you would be right on the trade, regardless of your entry, you really need to see a close above that. What we have right now in silver is a falling price oscillator. That's the bottom panel. Difference between the 19 and the 39 exponential moving average. We have a falling price oscillator below zero. You don't like to see that. That is a bearish meaning. Now, that just gives you the meaning. You have to go and find support, which we're going to do. What we do like about the chart is that the low that it did form, let me get my crosshair out here, on February 9th, that happened to be a Tom DeMark setup 9 count out there, black number 9. That means that for 9 sessions in a row, the close of that session was lower than the close 4 bars earlier. Oftentimes, not always, but oftentimes that can mark a reversal point. At this stage, it has marked a bottom. So maybe it's just a retracement that is underway inside of silver, right? We're trying to get our head wrapped around just what's going on in a daily chart for silver in order to be able to try to answer your question, hey, where is an entry point? The last time we saw one of those TDs set up 9 counts was on the trading day of December the 8th. And the actual low came in just a few days later, so you see they're worth paying attention to. They do not always mark tops or bottoms. So you've got to be paying attention to a number of different tools that we like to use out here, such as Stevie's red line, to help mark the occasion. We also like to see where was bar number 9 trading. Was it trading inside of bar number 6 and bar number 5? And if it was, it says, hey, the ascent or descent may really be diminishing. Yeah, every now and then I've got to search for a word. That's what they kind of. It's not because I had something that was good for lunch, although I did have a crab cake and some nice big piece of jumbo shrimp, so it wasn't too bad. But let's get back to the question at hand. Where is an entry point? So we know we have a falling price oscillator on a daily chart, and we know that means that it's, we'll call it at least bearish at the moment. Then what we have to do is go figure out, well, where is support inside of silver? Well, if we just come to the daily time frame, Stevie's synthetic contract, which gives us the best set of market profiles out here, we'll see that that price point is 16.339. And the answer to your question is yesterday might have been that bottom, because the actual low was 16.34. I think if we round up 0.339, we'll get to 0.34. How good do those profiles work? They work really good. It is a bullish structured box out here. So that means, okay, a level of support has held. Now, just like when Bill and I were taking a look at soybean oil, it really kind of makes the trade easy because you know that you've got a good reward to risk out here, because in trading silver, if that low holds, what you're looking at is a move up to the 1696 level. That's the top of the box. That would become our target. That doesn't mean we're not going to see some agitation in between, but that would become our target. And what you also know is if you see a close below 1633, that you need to go ahead and exit the trade. And, you know, recoup what capital you can and be ready to fire again, because maybe then what silver's going to do is either test or bust out the low of $16.21. So, Tom, I hope that all that helps to answer your question. It didn't really give you a price in USLV, because more importantly, we looked at the underlying instrument out here. So yesterday may have been the entry point. You do the reward to risk management out here. Maybe we're going to go test it again. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go answer our next question. This is from Mr. Z inside the Tiger's Den, and he writes in and says, Steve, the NQ, the current contract, it's bounced from 68.93 to 69.51 now. Any risk that this contract pulls back more deeply in this time frame, question mark, question mark, question mark. So time frame kind of, I guess, let's just take a look and try to answer that question. So when we start off by taking a look at our market profiles, that's going to be one of the places that we're going to look. Let me also fire something else up that I didn't realize I didn't have on, because I had it on my laptop earlier this morning. So I'll get to that. But when we take a look at these market profiles out here, what we're looking for is to see on any of these time frames, 30, 60, 240, daily, or weekly, are we trading below the bottom of the profile? That would be, have we broken support? That's really the question that we're asking ourselves. So when we take a look at this right now, we can see the answer to that is no. We're not trading below the low of any time frame out here. In fact, right now, so the weekly is very bullish because we are above the top of its box. That support is done at 65.65. We're above the top of the daily box at 68.23. That would be your first level of support on any pullback, just to answer your question out there. That would be what I would be looking for. I was surprised that today we didn't form a new profile with that orange candle. The orange candle is a kind of is a signal that there may be, it's not that it will, but may be a new profile that is forming. Sometimes it takes a bar or two, but we don't have any information out here to say other than, hey, 68.23 would be support, but that's not coming into play right now. The 240-minute profile says, you know what? I might want to go explore the 7,009 level. At 7,009, the structure of that box, somewhat bearish. That may be a significant level of resistance. That's the most recent high that is out here on that time frame. It's not the all-time high, but it's the high from a couple of days ago. You're above the box on a 60-minute time frame. So, and that was a bearish structured box out here. Maybe you can't see it so well. Let me do this here. Let me just turn off price so you'll be able to see it. And this is a box that formed within the past hour. So you're looking for some new information, right? And you can see out here, this is the last profile inside this box that was a bearish structured box. So closing above 69.35 out here for that hourly time frame, That's bullish. That says, hey, I want to head higher out here. So I drop down just simply one more level and says 69.63 is what you would expect. So between 69.63 and 7,009 is what you should anticipate is where the price wants to move to next. We would have to start breaking some support levels to then say, yes, there's a chance that it's going to go ahead and move lower. I'm just giving you the information as we've got at 1:45 in the afternoon. If I pull over this 30-minute time frame chart out here, what we can see is that when it made that bottom earlier this morning, or last night, I should say, this is at 11 o'clock last night, 2300, moves lower, does it with less relative energy. Here's where the cavalry arrives. You get a hammer candle, you get a double hammer. Right on you're getting hammered out here at 11:30 at night. Of course, that kind of makes sense out there. So it puts in that bottom. Thus far, it held. Right, you saw a little push down at noon. That area here of support held. The hammer, the low of the hammer candles out here. But what's different right now that we haven't seen yet today is we are now seeing this price oscillator get to the zero or maybe above zero out here. So, Mr. Z, that is the next area for you to be watching. What should unfold over the course of the next hour or so, whatever the time frame is we ought to see Stevie's red line, currently priced at 69.34, and price catch up to each other. I don't know whether it's a combination of Stevie's red line continue to move higher with price pulling back a little bit, whether it's a zoom down to test it. But the point is that when and if that test unfolds, and if there is a bounce off of Stevie's red line, meaning it moves higher, then that is confirming the at least shorter term bullish message out here. And if it breaks below that, then you can start taking a look at some of those other lower price targets out there. But right now, they're just simply support. So nothing inside the NQ charts that you and I are looking at support anything that there's huge downside action. On a daily basis, Stevie's red line inside the NQ is at 68.60. That's the level that would need to be broken in order for that to unfold. And then finally, because I now have it up on my screen out here, the next thing that we would look at would just say, you know, what's going on inside of the underlying elements for the NASDAQ 100 out here, and we can look at it on all different time frames. And what you are now seeing right now, as we speak, and I mean like right now, we're seeing a potential, well, what we're seeing is a bullish crossover. It's not potential. It's just 147, so I don't know how the hour is going to end here. But at 147, on an hourly chart, you're seeing the green line cross over the red line. That means that more issues inside the NASDAQ 100 are trading above resistance. More meaning 46. 39 of those issues, 39 issues are trading below the bottom. So it gives you a bullish crossover. So you're getting another bullish message here on a 60-minute time frame. So that's not supporting a move lower. If we look at the 4-hour time frame, 4-hour time frame says, well, hey, maybe not so fast. So that just really supports for us that resistance levels that we took a look at. Daily, well, on a daily basis, you've got a nice bullish crossover. On a weekly, you've got a nice bullish crossover, and it's why the NASDAQ is not cratering. And it's not cratering, and the reason why it's outperforming the other indices is because of the strong market breadth that it has, the underlying instruments. More issues trading above the top of their box than the bottom on all time frames, with the exception of the 240-minute chart out there. So I hope that that helps you out, at least from a technical, analytical, and fundamental standpoint out here for the NQ. There was another question that came in, so we want to get to it as well. This is from Larry. Larry C. writes in, hi, Steve, if you have time, can you look at CLF for me? Well, we're going to make the time. I just want to find my 3 time frame chart for you, CLF, and then let's go read about what it is you're looking for. So I am long this stock, long term, and wondering what you think and where the TAS daily, weekly lows are, looking for support, and where my red line is at. Oh, that's a lot of information out here. Well, look, you've got all the TAS profile levels right now if you're watching us on TigerTV. You've got the daily profile, you've got the weekly, you've got the monthly, and the daily says support is really the top of the box, not the bottom right now. That's at 716. You're at 725 as we speak right now. It's had a nice wide-ranging bar with good volume on February 16th. The good volume happened to be, let's go see what that number was, by the way. That was volume of 23 million shares, and you're pulling back with light volume into this candle. So it's got support. Level 1 support, 716. If you close below that, well, then that's going to bring the 648 area into play. From a weekly perspective out here, support is down at $6.28. Real resistance for you is up at $8.83. And on a monthly basis, you'd really love to see this thing close above $7.89. That's a key level of support. Right now for you, it is nothing but resistance. With regard to Stevie's red line, well, it's not a number that you wanted to hear, but it is what it is. It's $7.39. You see that price oscillator? It's really hovering around zero. Says to me over the next coming days, we're going to see a test of Stevie's red line. You need to see it clear that level. Otherwise, more retracement would be the call. Steve Rhodes with TFNN. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So just as a follow-up to yesterday, so we've gone through all of today's questions, to my knowledge, out there. And thanks for, taking the time to go ahead and write in or post something inside. That always makes the show just go so much easier when I'm providing you with information that you absolutely want out there. And that way it makes it a little bit easier for you to trade. And yesterday we were talking about, there was a question that came in asking about gold, and I went through kind of a fairly long scenario because we really took a look look at the long term, right? We absolutely always have to understand what's going on from a long-term standpoint out there. You just want to. It makes things much easier. If you were to go take a look at the monthly candles, for example, for each of the indices right now, you would see very few bearish reversal signals on a monthly basis. And that's really important out here. If we were to see that, that says there could be some problems here as we go forward. But let's stay focused right here. This is the time frame chart I made reference to. We're back between June of 2004 and June of 2006. There were 17 rate increases. Every Fed meeting was a quarter-point move. Now, we began at the 1% level out there. And so you can see each of those items are marked on the bottom panel of the chart. The bottom panel of the chart is also the S&P 500. You can see sometimes there was a move down, sometimes there wasn't. What we do know during that time period was the S&P was able to move higher over that 2-year period of time. This is also the period of time when there was the American Jobs Act. I think that's what it was called, which was repatriation out there. It was only about 400 or 500 million versus the billions that we have this time. So again, the market moved up. The top portion of the screen is gold. And this shows, just like the pattern we looked at yesterday on a monthly basis, that shows that, okay, gold has given us a real glimmer, kind of an Olympic glimmer of catching a gold medal and moving beyond its highs. Back here, as the Fed was raising rates, guess what? Gold went on to form its all-time high. Folks, stay tuned and wish a happy birthday to the one and only polar bear. I don't know whether it's today or tomorrow. He's got to tell us when he actually celebrates it, because I want a big piece of his cake. Stay tuned for him. Tom O'Brien from 3 to 5. I'll be back with you tomorrow. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.